Central banks like the Fed are taking their sweet time, but ultimately they are moving towards rising interest rates. If they decide to go at the pace they claimed throughout 2018, it would be entirely disastrous. Stock markets, corporations, and the average person will all feel the negative consequences of rising interest rates in a debt-based world. You came here for the truth, so let me unveil that for you. Today we are going to look at several situations in the US. I want to cover so much more information. Let's begin with this. An improving picture for companies doesn't offset the high levels of debt for S&P Global Ratings, and a new paradigm in interest rates could upset the balance. And this is something that doesn't get talked about enough, but we saw what could happen at the peak of the market. Suddenly, there was this threat of interest rates increasing and the market was shaken. So let's go into this further. Corporations were and are benefiting from an ongoing recovery in their earnings and cash flow, and in the US, they've gotten an extra boost from the recent tax bill. Now, what they also said was this: all of that will help companies cope with their high debt levels and pay some of it down. But even so, overall indebtedness will still be elevated. When debt is this steep and default rates are low, something's got to give. Such leverage implies sensitivity to both higher funding costs and reduced access to financing. That's what happened the last time around throughout the financial crisis, where the money was being given, and all of a sudden it tightened up. And all of that changed very quickly. Well, they looked at 13,000 corporate issuers and found that, believe it or not, 37% had a debt-to-earnings ratio of 5 times last year, making them eligible for the label of highly leveraged. That's 5 percentage points higher than in 2007. So this is something that we really need to understand. These companies, yes, they're in debt, and that's okay. Well, not really, but it's not as bad as it could be. As long as interest rates stay low, everything's going to be fine. If they rise, we got a big problem. That's what they talk about here. But companies around the world are at or near the top of the business cycle. Lower asset prices and liquidity reversals are major risks. If realized, defaults may become significant given leverage levels. So they are so indebted right now at this time that there's no way they would be able to pay off all their debt once interest rates rise. And it doesn't mean that they go from, let's say, an interest rate they're borrowing currently at 5% and it would have to go to 20% like it was during 1980 timeframe. No, we're talking about just moving up a couple percentage points. That would be enough to break their backs. All right, moving on. China slapped a logistics company with fines totaling 5.5 billion yuan, that's $870 million, for manipulating the stock market. Can you believe it? The biggest ever punishment for such an infringement. So it gets further into this here about exactly what they did. All I wanted to note was, number one, they actually, believe it or not, seem to be pursuing the manipulation of the stock market and are trying to clamp down on that. Yet, in the US, we know it happens. We're being told it's happening all the time by these companies, and nothing but a slap on the wrist, if anything. But I would also like to interject the fact that China themselves, their central bank, they want to be the only game in town. So, of course, I just thought it was interesting that it's so different in China, that they're actually punishing those who are acting like this. Now, we don't really know what's really going on behind the scenes, but at least on the surface, we are able to see this. They asked, this is Bank of America Merrill Lynch, they asked investors, what impact do you expect from an escalation of US trade tensions? And by far, the number one here at 40%, lower global equities. If stocks drop, it's going to be a big problem. Okay, and they're suggesting that the trade tensions could be the cause of this. They also get into the lower US dollar. I don't expect an escalation in US trade tensions, 17%. And a bunch of people said they don't know. Look at this. Current debt in the US. 21. What is that? Is that million? Is that billion? No, that's $21 trillion. Officially, total public debt outstanding has surpassed $21 trillion in the US. 5.6 trillion is intragovernmental holding. So you steal from one part of the government and you give it to another part in order to pay off things. And that's accumulating now up to $5.6 trillion. That is actually as of March 15th, 2018. That information is very new, and you'll see that the debt will only expand as time goes on. There's no way that they can ever get out of it. There's no way corporations will get out of debt. The only thing that will save these companies and people and governments is to basically default on the debt. Just like an average individual may go bankrupt, countries can go bankrupt as well. Companies go bankrupt as well. It happens throughout history. There have been hundreds and hundreds of cases over the last 100, 200 years where countries have defaulted. Essentially, they have gone bankrupt. There have been countless cases in which we've experienced a complete devaluation of a currency. Hyperinflation. It's not just Zimbabwe in 2008. It's, if that's what you think, you need to open up the history books and really understand what has happened. There are many, many cases of that. And although people believe that the Federal Reserve will be there to save the US dollar, in fact, what this central bank is doing is no different than what all central banks do, and that is devalue currency, their currency, every single day that goes on. National debt as a fraction of GDP, you'll see where the projection is right here to continue to escalate. That's according to the CBO current law projection. You can see how it's rising and rising, but of course along the way things will change, and it's not just going to be rising and rising. Like you can see what happened here during let's say into the 1940s here. It didn't just continue rising up into the sky. It actually, of course, came down and then retraced its steps upward. What we have in terms of the debt and the GDP is that the GDP is not rising fast enough in comparison to the amount of debt. And while you can get away with that for a little while, eventually it catches up to you. So that's the position that we are seeing today. This right here, I mean, this is all sectors, debt, securities, and loans in the billions of dollars from the Fed website. And they're pointing to something very interesting. This brief period of slowing credit expansion nearly collapsed the global financial system. So essentially what we had is a consistent rise here for decades on end. Barely any change. It was always rising. And then the financial crisis hit. And as you can see right here, it dips down such a small amount. And that almost tipped the entire financial system over. Just imagine if we encounter something in the near future that brings it down a little more of a significant amount. We're going to have a very big problem. All right, now this was interesting here. I don't know if the mainstream is going to cover this one, but it's something that I thought would be very interesting to talk about. Russia considers an extra $16 billion bailout for 2 rescued banks. Russia's central bank is considering pumping more than 1 trillion rubles into 2 banks it first bailed out last year to shore up their balance sheets. So we have bank bailouts going on, not just in Italy, not just in Spain, not just in Greece, not just in practically every country out there, but it's in Russia as well. And you can see that just recently right now, I don't think I pulled the chart up here, but what I was reading in preparation for this video was the ruble is being devalued against the US dollar here in the last little while, so that's something to pay attention to as well. But taking a look at what's happened with Russia, obviously oil's price, it has come up recently. However, compared to where it was a few years ago, obviously anybody who's an oil exporter is going to be hurting by the current prices that they're seeing. That's one thing that Russia is feeling right now. Obviously the sanctions, obviously all of the tensions that have been building and building and building. It's not good in this case. Now the bank here, they have their own problems. It's a different story, but it's not a good sign when your banking system collapses, because it starts with a small to medium-sized bank, then it's a medium to large-sized bank, then it's insurance companies, then it's this company and that company, and so on. And you have a big problem, a chain reaction occurs. So let's keep our eyes on what happens with Russia. This here is a continuing story, and in a way, I hate covering it, but I know it's so important, and I know that many people are really affected by this, and that is Venezuela. The 4-hour formal outages began on Thursday, but many residents scoffed at the announcement, Riley noting that they have been suffering far more extended blackouts during the last week. We have spent 14 hours without electricity today, and yesterday electricity came and went. For 6 hours, we had no power. And that's what's happening here. There is a rolling system of blackouts taking place in Venezuela. And obviously this is an extreme example. They have this massive case of hyperinflation. Their economy is destroyed, will never get better, and a country sitting on massive quantities of oil reserves cannot get it out of the ground, refine it, and use it for themselves. I mean, they're running out. And it's insane because they're sitting on top of a massive pile, but they can't use it. They don't have the resources. So there's a lot going on in Venezuela. I'm just pointing it out. You know, there's talk of external forces at play. There's talk of internal corruption at play. All that matters really is the people who are affected by it. And you can see they're leaving in droves. It's quite a sad scenario. And then I'll say goodbye to everybody who doesn't want to hear this next part. Thank you for joining me on today's video. You're free to leave now. But if you stayed, and if you stayed up hearing me rant and rave up until this point, I saw this image and I thought it was something really interesting. Comforting lies, and you can see the people lining up around the corner. And the guy who has the booth with the unpleasant truths seems to be sitting there quite lonely, quite bored. And I often feel that this is me on the right, where there's so many people who will line up to the mainstream media and get their comfort, feel good about it. When they're told something, they can believe it. But I'd rather be here, ridiculed, ignored, and let's say liked by a smaller group of people who's just a group of people who want to know the truth and who want to be just obsessed with understanding what's really going on. That's what I want. So I'll be that guy on the right. And all those who want to be in either the lineup or want to be that guy on the left, by all means, please do so. But I just want to know the truth. And that's why I do this program. So that's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. The links are in the description below. Take care.